Good morning. It's Jeffrey Christian of CPM Group. It's 10 o'clock on Tuesday morning, the 16th of January here in New York. Price of silver is around $23.20. The price of gold is around $2,041. Pretty much treading water, waiting for some direction, flopping around. I want to talk today about above ground silver inventories. We've been getting a lot of questions about it. There's a lot of clearly inaccurate information about how much silver is in above ground inventories. So I wanted to talk about that today. It's something that we've followed for nearly 50 years, and we have data. You have to start with the fact that about 60 billion ounces of silver have been mined through history. And you can see from this chart, the vast majority of it, more than 50 billion out of the 60 billion has been mined since 1800 by organized mining companies that kept records in countries that kept records of the silver that was being mined. In addition to that, in that period from, say, 1500 to 1800, you had Spanish and Portuguese and other colonial powers keeping track of the amount of silver that was being mined in Peru, Bolivia, Mexico, and other countries. Of that 60 billion ounces, it is estimated that about half of it is somewhat identifiable and recoverable, either in bullion form or in manufactured products. The vast majority of it is in manufactured products, jewelry, decorative objects, religious objects around the world. So there's a lot of silver above ground. These are the footnotes behind the historic data. I won't bore you with them, but I put him here in case people actually want to read them. Now, of that silver, we estimate that about 5.5 billion ounces is held in refined silver bullion bars and coins around the world. The green part is the coins, and you can see bullion coins really started to be minted and sold around 1985 with the US Silver Eagle and the Canadian Maple Leaf. Other coins have joined since that time, and it has become an important part of the silver investment market. And you can go back here and you can see bullion, we estimate about 3.2 billion ounces in bullion bar form, and not just bars, but medallions, which are not official coins. They're privately struck rounds, and smaller bars and things like that. And about 2.3 billion ounces in coin form. So that 2.3 billion ounces in coin form really has been created and bought by investors and held by investors since 1985. The blue part are CPM Group's estimates of implied unreported inventories based on all of the other data that we have. The orange part are exchange inventories. There's a dark blue part, which is very small these days. It's government inventories. And then the bottom part in gray are exchange-traded products, not just exchange-traded funds, but also some exchange-traded notes that hold physical silver. And that has become important. Close to 1 billion ounces of silver right now in those things that have been built up primarily since 2005. So there is a lot of silver above ground, and a lot of it is identifiable. It's there. That's the data. Just a little bit of history. The US Treasury used to be the market maker for silver, buying and selling at various prices from the 1870s until the 1960s. At its peak, it had about 3.3 billion ounces of silver in the early 1940s. By the way, there's been some talk recently about how the Manhattan Project used about 146 million ounces of silver that it borrowed from the Treasury during World War II, during the Manhattan Project development of the atomic bomb. And people talk about how it was very critical to use silver in these early experiments with nuclear fission, nuclear fission. The reality is that the Manhattan Project used the silver because the Treasury had a bunch of silver. It wanted to use copper, but because we were in World War II, copper was very much needed for the war effort. And so the U.S. government said, we will not let you use that much copper for your experiment. Use the silver as an alternative. So that's critical to understand the difference between silver and copper, and the fact that silver is an essential metal, but it's not a critical metal, and it's not a strategic metal. It's a metal that has certain chemical, physical, electrical properties that are very useful. But when people tell you, well, the Manhattan Project couldn't have happened without silver, that's because it didn't have access to the copper that it wanted. You put all that together, historic mine production, secondary recovery, fabrication demand, investment demand, and you come up with surpluses and deficits. And the surpluses and deficits are calculated properly as total refined production from mines and scrap, less fabrication demand. You do not include investment demand in your surplus and deficit calculations, because you want to know, of the silver that's actually being used to make stuff, how does that stack up against the available silver, right? And what happens, it happened in the 1960s, it happened in the 1980s, and it's happened since 2005, is that investors from time to time will want to buy a lot of silver, and they will bid the price up. And they will bid the price high enough that you see increased mine production, increased secondary recovery, and decreased fabrication demand. Investors bid silver away from fabricators and create surpluses of silver that they can buy relative to fabrication demand. And if you really want to know, if you're an investor and you want to know, is this market tight enough that the price might rise, you really want to know that it is in a deficit of total newly refined mine production relative to fabrication demand. Because the investors can come and go, they're complete discretion. It's very important. When CPM Group does its research, we use Commodities Research 101 techniques, and that's how we calculate surpluses and deficits. In the late 1980s, early 1990s, the Silver Institute asked for the rights to produce stripped-down versions of what was then the CPM Group Silver Survey and created the World Silver Survey. And we produced the first 5 World Silver Surveys for the Silver Institute. We parted company in the mid-90s. They wanted us to be more bullish. They wanted us to add investment demand in, so that the surpluses that we were showing, you can see here from 1990 into 1995, growing surpluses, they wanted to have a more bullish, less pessimistic view. Our long-term view of silver in the early 1990s was that the price was trading between $3.50 and $5.50, and that it probably would do that for a long period of time, but the time would come when the market would change. Investors would sell less silver, they'd start buying silver on a net basis, and they would drive the price higher. But we're saying that we thought that was more than a decade away in the early 1990s, and it was. That change started to emerge around 2000. You can see here the deficits declined sharply, and then they disappeared around 2005, 2006. That represented increased investment buying, the same way it represented it in the late 1970s, early 1980s. It's very important to remember that, right? So there's plenty of silver. The bottom line in the real world is there's plenty of silver above ground stock, 5.5 billion ounces of silver available. Now, as I pointed out textually in this chart, more than 80% of that is held by investors. Banks and trading companies own some, which they lease out to mining companies, refiners, smelters, and industrial users, wholesalers, and retailers of silver-bearing products. But the vast majority, more than 80%, is held by investors, an enormous amount of silver. Now, there's a side issue that I've been asked by several people to clarify. On page 25 of the Silver Institute 2023 World Silver Survey, which is produced by other people since 1995 or so, and includes investment demand with fabrication demand to show big deficits and smaller surpluses, so it has a more bullish view. And on page 25 of this year, last year's World Silver Survey, there was a quote that the deficits that they have estimated for 2021 and 2022 have more than wiped out the cumulative gains in above-ground stocks that we, the Silver Institute, saw over 2010-2020. And people have said, this doesn't sound right. And they're right. And they've asked us to clarify it. And so, as abhorrent as it is to us to comment on other research companies' research reports, we'll talk a little bit about this. The deficit didn't wipe out any above-ground inventories, but purportedly would have added 607 million ounces to above-ground inventories. The Silver Institute, the World Silver Survey, estimates that in 2021 and 2022, there were 607 million ounces of silver bought by investors in bullion, bar, and coin form. Those were 607 million ounces that were not taken out of above-ground stocks. They were added to above-ground stocks. If you include investment demand in your surplus deficit, you skew the methodology, you skew the results. Investment demand adds to above-ground stocks. It does not reduce refined inventories. The data to show deficits by adding investment demand kind of makes a more bullish view than is real. The estimates of investment demand in the World Silver Survey seem way too high to CPM Group and other participants in the physical silver market. And the deficits that are shown for those 2 years, and I think into 2023, are deficits because they include these very high investment demand figures. You take out those high investment demand figures and you have surpluses, which is what CPM Group is showing. The deficits represent additions to above-ground inventories. Using the World Silver Survey data, there would have been 3.2 billion ounces of silver added to above-ground inventories between 2010 and 2023. There would have been 870 million ounces of silver added in 2021, 2022, and 2023. 607 in the first 2 years, and the difference between that and 870 in 2023. So people have asked us, hey, is it true that the above-ground inventories built up over the last 2 decades have been absorbed by fabrication demand and investment demand over the last 3 years, or 2 years in the case of what the World Silver Survey was saying? Yes and no. Yeah, there were silver investors selling silver during that time, and there were silver investors buying that silver. And it stayed in refined above-ground inventories, which total about 5.5 billion ounces. So there you have it. We will be having an open forum for our clients on February 1st. We will be having a free open online seminar, Silver Facts and Fantasies, on February 28th, the week before the Prospectors and Developers Association of Canada has its big annual convention in Toronto. We will have our 20th annual silver reception on Sunday, March 3rd in Toronto at the start of the PDAC. Companies that want to be sponsors of that reception should contact CPM Group at info@cpmgroup.com. We'll be coming out with our gold yearbook in late March, silver yearbook in mid-May, platinum group metals yearbook in the middle of July. And we are organizing a silver seminar probably for late October, probably in Spokane. We already have several mining companies and other silver market entities that want to participate in that. You can go to our website, www.cpmgroup.com, and you can get free reads, free videos, free reports, and you can read about the things that we charge for. We sell research and consulting services. We don't sell silver. We don't sell gold. We sell the ability to make money and protect your wealth through commodities investments. We sell advice and research and data that can be relied on. And you can write to us at info@cpmgroup.com and say, I'd like to talk to you about how you can help us. That's all I have for now. We'll be back later in the week. Take care of yourself. Take care of people around you. Stay warm if you're in the Northern Hemisphere. And we'll see you soon.